We're going to go to John in Philly, although we only have 1 minute in this segment. We'll probably have to take you through the rest of the other segment. How you doing today, John?
David, I'm doing very well. Thanks for taking the call. David, I wanted to ask if you could help me looking at two bond-related ETFs. And
Okay.
I will apologize in advance. I've got phone difficulties, so I'm going to ask the question and then listen in the second session. But if you can look at LQD, which is the investment-grade bond ETF, and the JNK for the high-yield bond ETF. If you can look at both of those and tell me what those tell you, please, I'd appreciate it.
Okay, we'll do that in the last segment. And a question about bond liquidity, or not liquidity, but bonds in general. One of the reasons I stay away from bonds is maybe they don't suit my strength, which is more technology. One of the other reasons why is a lot of the data is severely opaque compared to what you get in the equity markets. And I think just because the equity markets tend to be pushed to retail customers, you get a little bit more of that. When we look at the two charts that John, the caller from Philadelphia, normally brings up, although I think he's in the Great White North today, you basically had all the volume on Friday, 60 million shares today. You got about 13 million shares so far, something like that. Compared to the 63 million share low that we go back to on the 9th. This is in the high yield junk bonds. J and K is the symbol on it. One of the things I will bring up is that may be changing. I went and did a big study a couple of years ago, actually called the people at FINRA, and they just happen to be starting a new system that they're going to track all the market data and make it available eventually to the public. And that is one of the problems I have. That is not available, at least wasn't available when I looked last month or 2 months ago. But they do give you a little bit of background on both corporate bonds and junk bonds. But that's probably going to change in the near future. I'd say I stay away from them because of that availability of data and how opaque it is. But when I looked at it, and I'm not an expert on it, I didn't spend more than a couple of days going through it and talking to the people at FINRA, which you can call, by the way, or email, and they'll gladly give you a response. But these guys are supposed to be the overlookers of the market. Some people probably do it better than me. I think I'm going to have a problem with it. I would look for that. But eventually, their plan, just like the short data that they put out every day, is going to be available to all traders. So when you can, not when you have to.